Nucor makes the steel that's used at every stage of the drilling and pipeline food chain. Plus, if Congress ever passes this infrastructure bill, Wall Street will go crazy for the steel stocks, which means they'll go crazy for Nucor. Meanwhile, management's committed to returning at least 40% of its earnings to its shareholders right now in the form of a huge buyback. Nucor bought a ton of stock back at an average price of $105, and that's up 10 from where it is now. That was last quarter. You could argue that was bad timing, given that it's now in the mid-90s. But I bet they keep buying back their own stock rapaciously now that it's down $10 from those levels, and they have so much cash. So here's the problem. Nucor is one of the best cyclicals in the S&P 500. So if you really want to take your cue from Goldman's research and throw in the towel, well, you got to figure out how to get the towel back. Figure out how to get back in at a lower level because it's best of breed. Very few investors are nimble enough to pull that off. I don't think you are, especially since the infrastructure package could potentially pass and send the stock soaring. Plus, it just seems crazy to sell now when Nucor's already down 25% from its high. I've worked with former CEO Dan D'Amico on a study which shows that positive steel cycles often last as long as 2 years. That means this one's probably still in its infancy. The moral of the story? As I told investment club members, when best-of-breed stocks get downgraded, you should use that weakness to do some buying, not selling. You rarely get this opportunity. Nucor is a world-class American manufacturer that rarely gets put on sale. Do not look a gift horse in the mouth.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.